Hooty, who all my stock market gamblers? Welcome today. I'm Tall Mike. So glad you're here. What's going on? Well, we got the market kind of had a pullback, right? Had a little pullback back to the 20-day moving average. Now, normally at this 20-day moving average is where the algorithms, they kick in, the buying algorithms, and then they push the S&P to a new record high. Now, eventually, we're going to break below the 20-day moving average. Could this be the time? It is possible. It is possible. It is possible, though, that the algorithms kick in and send us to a new record high. But the reason I think that we're probably actually going to break through the 20-day moving average to the downside is because if you look at the NASDAQ has been moving sideways. It hasn't been setting the new record highs like the S&P has. It's been moving sideways for the last 5 weeks. It's exactly where it was 5 weeks ago. Now, this is kind of a divergence. The S&P making new highs, the NASDAQ not making new highs. Now, I watch NVIDIA. NVIDIA is the leader of the NASDAQ. It's starting to break down. It's not making new highs. Now, we'll see how this plays out. Of course, it could reverse and NVIDIA could hit a new record high and send all the markets higher, right? But I think it's getting time where we're going to break through the 20-day moving average to the downside on the S&P. We'll see how that all plays out. All right, let's get over to the real estate market now. Real estate market headline, Barbara Cochran comes out and says home prices are going to go through the roof when the Fed cuts rates. Now, you see, could she be right? I suppose she could. But here's where I agree with her. The Fed is going to cut rates. I agree the Fed's going to cut rates. I don't agree that the home prices are going to jump up when the Fed cuts rates. Now, why is the Fed going to cut rates? Let's think about this. Okay, the Fed's going to cut rates, but I think this is a big, huge mistake. The reason being is that we're in this big, massive bull run in the commodities market, which is basically caused by inflation. You can look at the bull run in the commodity market up already about 15% just this year, just 2024, but yet they're telling you that that the inflation number is going to get down to 2% when commodity prices are already up 14% for the year. Now, what are commodity prices? They're things like food, things like oil, things like energy. Now, oil, it's in everything, right? It's in every product. It takes oil to make the products, right? It takes oil to ship the products to get them to the store. Oil is in everything, and this is very inflationary. You're seeing the price of oil going higher and higher, right? You're seeing the price of gold. Gold's hitting record highs, right high, but gold's not really going up. It's the dollar that's collapsing. The dollar not against other currencies, but against your purchasing power. Your purchasing power goes down every time they print money. You see, so gold is telling the Fed they're making a big mistake by cutting rates. But I do believe they're going to cut rates. Now, why in the world would the Fed cut rates? Well, if they don't cut rates, we're going to get this catastrophic collapse, right? We're going to have a catastrophic collapse of the financial system, of the banking system, if you will. You see, commercial real estate is kind of the backbone to the banking system right now, okay? Now, commercial real estate is in big trouble. You see these office buildings, high-rise office buildings, these are sitting vacant. They're sitting, at best, 50% occupancy, but some of them are completely vacant. Now, what's going to happen? Well, these have loans against them. They're commercial mortgage-backed security. And who owns these loans? Well, the bank owns these loans. Now, the banks have not taken the losses yet. Why haven't they? Because they don't have to. They can just hold on to the paper, and when the paper becomes due, which is every 3 to 5 years on commercial paper, right? Then they have a problem, right? Because then they're going to have to tell the owner of that big office building, we're not going to give you a loan. So what are they going to do? They're going to take back the building, they're going to dump it onto the market, and they're going to realize they can't even get 50 cents on the dollar right now. They're going to have to cut the price 60, 70, 80% off. Okay, now that makes sense, right? So their loans that they're carrying on their bank balance sheet should have an 80% haircut already, but they don't. They don't have that haircut yet because the bank doesn't want to feel the pain yet. All right. Now, what? It's much worse than I'm telling you. It's much worse. You see, even though these office buildings are sitting vacant, some of them are still having their payment paid. Okay, let's say, for example, let's say Apple Computer owns some office buildings that they were renting, but they don't need the space anymore because those people are now working from home. But yet they're still making their payment. They're still making their payment. So the owner of the building doesn't look at it as a vacancy. The bank doesn't look at it as a vacancy yet because it's still getting paid from Apple Computer, even though the people aren't working there. But when the lease comes due, is Apple going to renew that lease? Now, I know Apple owns most of their buildings outright, but they do still rent some buildings. Google rents buildings, Facebook rents buildings, all the major companies rent buildings, and these major companies can't default. They have to continue to pay, otherwise they'll get sued, and they have the money to pay, so they have to continue to make their payment. But when the lease comes due, they're not going to be renewing the lease. The lease is going to now not get renewed. It's going to become a vacant property, and the bank's not going to make the loan on these. So the commercial real estate is a huge problem, right? Now, we've already had 5 of the top 50 banks go out of business just in the last year, but it's going to get much worse than that. It's going to get way worse. You're going to some estimates are 1 out of every 3 banks are in trouble, that they're actually going to go under. 1 out of every 3 banks will go under, and when that happens, they'll all come tumbling down. But Mike, what difference does it make? The FDIC, they're gonna bail us all out. They got the money. Look, there's $20 trillion dollars worth of deposits, right? 20 trillion. FDIC has less than 100 billion. You're going to get a half a cent on every dollar in there, a half a cent, not 1 cent, a half a cent. That's how much the FDIC has. Now, I'll be the first to admit that the Fed's probably going to print $10-20 trillion to bail them out. But how long is that going to take for you to get your money back? I don't trust banks right now. They're all in trouble. They're going to be going down. And when the Fed creates the money to bail out the banking system, what does it do to your purchasing power? Your purchasing power keeps going down, right? Now, Barbara Cochran, let's get back to her. She says that home prices are going to boom. Home prices are going to go through the roof when the Fed cuts rates. I don't think so. You see, the Fed's going to cut rates. I agree with her on that part. But when they cut rates, the market's going to say, no, not this time. We see what you're doing. You're going to hyperinflate. You're going to bring the rates down, going to send inflation through the roof. So what happens to the long end of the curve? Long end of the curve is going to start going up. They're not going to buy this rate cut stuff. They're going to start going from 4%, 5%, 6, 7, 8, 9, 10% on the long end, which is the 30-year bond market. Now, here's the problem. Here's why it's going to get much worse than I'm telling you. You see, nobody wants to buy these bonds anymore. All the central banks around the world, they used to buy these bonds, and that was their tier 1 reserve currency that they'd hold, right? They'd hold the U.S. bond. They don't want them anymore. They don't want to buy them anymore because they see that they're completely worthless. They see that the emperor is not wearing any clothes. They see that there's no way that the United States will ever pay off their debt. So they're saying, no, we don't want these anymore. We're now dumping our bonds. They're trying to get out of bonds. What are they buying? They're buying gold. See, the public is not buying gold yet, but gold's making new record highs. It's not on the public's radar. It's not on anyone's radar. They don't talk about gold on the mainstream media anymore. Hitting record high day after day, hitting record high. What do they talk about? They talk about Bitcoin. Bitcoin's struggling to stay at its high that it hit back in 2021. It hit that at 69, 70,000. It's right there, but it's dropping, can't hold it. But gold hitting record highs every day. See, the central banks, they're not buying Bitcoin. They're buying gold because they see the writing on the wall. People trust gold. When the reset happens, they're going to need gold to reset their currency. So what's happening? They're not buying the bonds. When they don't buy the bonds, who's the only buyer left? The buyer of last reserve, the Federal Reserve, right? They're the only buyer that's going to be buying the bonds. And they're not going to be able to buy them all because balance sheet is going to explode from 8 trillion to 10 trillion to 20 trillion and probably north of 20 trillion dollars. What's that going to do to the interest rate on the long side? It's going to send it up higher. Could be higher than 10%. Could go above 12%. What's that going to do to house prices? When you got to pay 14% for a mortgage, I'm telling you, house prices are not going to go up like Barbara Cochran's telling you. Now, you can believe her. That's fine. You don't need to believe Tall Mike. You can go out there and buy a house right now. More power to you. I hope it works out. But I'm telling you, as those go up 10, 12, 14% for the mortgage rates, you're going to see the house prices get cut by 10, 20, 30, 40, 50%. The prices are going to start to come down. That's where she's missing the point. She's missing the point that the long end of the curve is not going to go down when the Fed cuts rates. Now, I agree with her. The Fed's going to cut rates. Why are the Fed going to cut rates? Because they're idiots. Complete idiots are cutting rates into a massive bull market in the commodities. You can look at the chart. The CRB index up 14% in 2024. There's no way inflation gets back to 2%. It's just not going to happen. It's going to skyrocket. It's going higher, and they're going to cut rates into this because they want their boy Biden to be reelected. It's an election year. Can they keep everything propped up till the end of the year? They're going to do their best. I agree with that. They want this stock market at record highs. They want houses up here where Billy Bob got out at. I don't think they can hold it. Maybe they can. Maybe they can hold it up here for another year. I don't think we have that much time before this catastrophic collapse happens. Catastrophic collapse in the financial system. Catastrophic collapse in the stock market. Catastrophic collapse in the real estate market. And this brings everything down. Brings the pensions down. Brings the whole system to a standstill. Brings it to making where the Great Depression is now going to be renamed the Mini Depression because the depression we're heading into is going to be much greater than the Great Depression. That's just my take. I want to be wrong. I pray every day that I'm wrong. I have nothing to gain by telling you this. This is just my point of view. Your point of view may be that of the Moon Boys, that we're going to the moon. You may be like Barbara Cochran. House prices are going through the roof. And they might go through the roof in nominal terms. Real terms, not a chance. Protect yourself. Get some gold, even though it's hitting new record highs. Very cheap. Nothing bad has happened yet. And gold just keeps going up day after day. And nothing bad. Wait till the bad stuff hits. That's just going to take off. Now, granted, there's going to be pullback. There's going to be volatility. I'm hoping we get a chance to buy it below 2,000 again. I don't think we're going to see that opportunity. But when the stock market crashes, it'll probably bring the gold stocks down with it and probably pull gold down temporarily. People will be selling anything they got to sell. Because why? Because people are buying stocks on margins. They're going to get margin calls. They're going to have to, these hedge funds are going to have to dump anything that they can get a bid on. And right now they can get a bid on gold. When the stock market crashes, probably going to pull gold down with it. There's going to be some volatility. It's not going to be a straight run up. But nothing bad's happened yet. The only thing that's happening is central banks are buying it because they see the writing on the wall. They don't want bonds. They don't want Bitcoin. They want gold because that's what we're going to reset against. People don't understand this. It's just my take. But now you know. Now you know my take. You might be a moon boy. I don't know if you're a moon boy. Give me a comment. Why not? Anyways, that's all I got today. Give me the thumbs up before you go. Punch the subscribe button. Get out there, everybody. Have a great day. We'll talk again on Friday. Bye-bye now.